us is Matthew Foster-Smith, a senior currency analyst at Thomson Reuters IFR Markets. Matt, last time we spoke, the S&B had just cut rates to curb the overvalued Swiss franc. Now they've gone one step further and set the floor at 120 for the euro-Swiss franc. Last month, your midterm projection was in the 112 range. How has all of this changed your forecast for the mid to long term?
Destroyed it in a simple word. Last time we spoke, we did say that there was the potential for the S&B to come in and either, set a negative interest rate, which they did through the forward markets, or potentially peg the Swiss franc. They haven't quite pegged the currency. We've set a minimum target of 120 against the euro, which is 83.3 reoccurring Swiss euro. What IFR are now predicting is we expect the Swiss franc to stay at around a minimum of 120 for certainly the next 6 months. But in the longer term, given the current state of the Eurozone debt crisis, we are predicting the Swiss franc to continue appreciating and the Swiss National Bank to give in for their interventions. So in the 1 year term, we expect Euro-Swiss to be back around 105. The Swiss elections in October, they're going to be a key event risk. The Swiss franc is going to dominate. Dollar Swiss, we're expecting to come back to around the 0.7 area in the 1 year.
The Norwegian krone has been hitting its highest levels against the euro since early 2003. We know that it's standing out more as a safe haven, but how is all of this going to affect the euro-Norwegian krone over the next year? Gold
and Norwegian krone are now the new safe haven. This isn't a new phenomenon for the Norwegian krone. I mean, it's very much an underlying trend. But what we've seen over the last week or so with the Swiss moves and the S&B pegging the Swiss franc is that the Norwegian krone is very much going to take over as the front runner as a safe haven currency. So in the short term, we're expecting to see an acceleration of the appreciation of the Norwegian krone. But in the longer term, it's just part of the trend. If you look at Norwegian fundamentals, a very solid economy, low inflation, it's very close to target central bank rates, local rates stand at 2.25%. The Norwegian central bank have come out and said that they are going to have to start using rates as a weapon to slow the rate of the Norwegian ascent. So that could act as a drag if we start seeing rate cuts down the line. But ultimately, that's not going to deter the financial markets. So we do expect to see euro NOK EUR 750 in 6 months, 730 in the 1 year. As you said, the 2003 low is, I believe it's 721.70. We could see that rate revisited, and that's not unfeasible with new all-time highs for the Norwegian krone. Potentially, 720, that's not unfeasible. But we do not expect a break below the 7 level in the next year.
OK, thank you, Matt. Lots of important and interesting information there for our traders. There'll be another edition of Targets in Focus tomorrow and throughout next week. Goodbye for now.